Joining me now from Canberra, Chris Richardson from Deloitte Access Economics to talk all kinds of economic matters, particularly with MyEFO being released in a couple of hours' time from now. Chris, good morning to you. So how do you expect MyEFO to look?
So there will be a chunk of bad news on the economy, mostly known bad news. On the budget, though, the news should still be okay. And that combination where the economy for 18 months now has been weakening and yet the budget has been slowly strengthening. It's unusual that those two are moving differently to each other. Economic update will tell us that growth is weaker than Treasury expected way back in the budget, which was delivered early this year at the start of April, and that weaker growth flowing through across a range of economic indicators. But the ones that drive the budget still looking okay. So
you've got, as you mentioned there, a chunk of bad news and a bit of good news as well. So who wins the day here, Chris?
It is good news that Australia has a healthier budget than most other rich nations. If the bad thing happens, if the world throws a recession our way, we are better positioned to jump and respond to that. If you think of the sort of levers that any nation can help to ward off a recession with, you can cut interest rates. Well, we can't do heaps of that, but you can do stuff with the budget. And the budget looking healthier gives us a little more wriggle room, more options, if you like, than many others around the world.
Okay, how do you expect Treasury updates to its budget forecast to look?
A couple of selective leaks or hints at leaks over the weekend. It would appear that we're not necessarily going to get more spending. I was wondering whether perhaps farmers and farm communities in particular would get some bigger bucks. That doesn't seem likely. What you will see is write-downs to both the tax side of the budget and the spending side of the budget. Economic trends weighing on taxes, profits not looking quite as good as they were for both miners and in particular the banks. That'll have an impact on taxes. And the other thing over time, particularly in a few years from now, is that weak wage growth will be taking a bigger bite out of the budget.
Are there any wild cards that you're expecting?
Yeah, there is, and it's been a trend that's been evident in the last couple of years. Any given amount of growth, whether you're talking Australia, whether you're talking around the world, shows up differently these days to how it used to. Other things equal, today's revisions to the shape of the economy, if you like, will show up weaker than expected wage growth, flowing through to weaker than expected price growth, inflation, flowing through to lower interest rates. But jobs and profits should still be okay. And that combination tends to save the government money. Lower prices and wages means cheaper programs.
Chris, there can be a bit of confusion for ordinary folk out there trying to assess things in their own time when they're looking at numbers today. For the layman, what are the numbers that matter when it comes to the mid-year update?
Two numbers matter. Real GDP, nominal GDP. You can think of how much extra the Australian economy is producing. The economy, those numbers will be weaker and there'll be discussion around that. Nominal GDP, you can think of that as national income. Even with the weaker economy, what Australia Proprietary Limited is earning is looking better than Treasury expected. That's Chinese stimulus and Brazilian mine closures, meaning that, for example, the iron ore price is still riding well above where Treasury was expecting it to at the time of the budget.
On the front page of the Australian today, there's the screaming headline, surplus to survive $30 billion blow. How significant is that write-down?
Look, it is pretty big. Budgets used to be boring over the last decade and a half. The ups and downs as the economy moved started to shift very big amounts of dollars. This isn't the biggest revision that we've seen, if that number is correct, but it is a notable one. It's very similar to what we forecast. Basically, yes, that weakness in profits and down the track weakness in wages, that combination hurting revenues. Again, it'll be that wild card. What happens to spending? Are those changes in the economy saving the government money on spending and therefore meaning the hit to the overall surplus not so big.
There is an expectation that there will be a stronger economic growth the following year. What do you put that down to?
So if you think of the key things that have been hurting the Australian economy so far, it's not the world economy, it's a terrible drought, and it's a housing downturn. A housing downturn that means not only are we building fewer apartments, but the earlier falls in housing prices have consumers scared, so consumers aren't spending as much. At some stage, the drought stops, growth picks up. At some stage, the current recovery in house prices should make consumers a little more comfortable. So I'm comfortable enough that growth will lift, but not soon and not that much.
Labor's argument, especially yesterday, was that workers aren't earning as much as the government said they would. Are they right when they say that?
Entirely right. It's a global phenomenon and it's not something that governments can easily fix. But again, this is something you're seeing all over the world. Growth these days in particular shows up as more jobs and less wages. More jobs certainly helps workers. Less wages, though, hurts not merely workers, but the bulk of workers, and that flows right through the economy. That's a driver of the grumpiness that you're seeing in electorates, again, not just in Australia, but all over the world.